Hello everybody and welcome to my channel where I'll be using technical analysis on the stock market, show you levels that I think are important to protect your finances to secure your future. Alright, another day to add to our wild week, and what we did today was opened up 10 $10 higher than what we closed yesterday. We had a slight bullish sentiment I tried to point out, and what we did was we closed right down right here and we gapped up right here. But what we really did is this high after our big face plant yesterday. I tried to point that out to you real quick yesterday. I made a line right here. I tried to say that this level was important for a reason, because it was. After the market fell off and tried to recover, it could have went farther than this. Absolutely it could have, but it didn't. That's where it decided to stop, and it made itself important, all in that reasoning. Okay, if that makes sense to you guys. And here we did close. We dropped from there, dropped from the point of without reason, closed the day, gapped up, kind of went below it, or kind of went above it, went back below it, came back, retest the high of the day, and got failed. Kind of got failed here multiple times. And then we dropped all the way down here, okay? And now here we are coming back to test the same level. Kind of got faded into the end of the day. 59 and 60. A little bit of less divergence doesn't mean that we won't gap above it tomorrow, but I don't think that we will. I think we're going to continue this momentum to the downside. I think we're due for a bit of a pullback, everybody. It's been 6-7 days technically up in a row, so 1 or 2 down days won't hurt anybody, or it shouldn't, because you should have been planning for it. So let's just watch these levels. The 39.20 is our resistance up ahead. Down below, we got this major one at 38.94. This trend line is kind of moving up $1 or $2 a day. So call it 38.95. And we have one gap right here before we get into really anything major or far away at 38.60. So watch out for those. I believe we're rolling over because our momentum is just absolutely fading off, even though we are still sideways. At this point right here, 38.16, it was kind of our high, and ever since we've been sideways, up and down, but momentum has just fading. So this would have been your divergent high at your point to sell, to at least ride back down here to pick up. That's where you get your green. You come back in, but here we are, I think, retesting that 38.16, 38.20, just to get denied again. We will find out tomorrow morning after hours. If we switch to the SPY real quick, we are down 50 cents so far. I'll point out a couple things later as to why I think so, but the SPY also is the same thing, but it has the negative divergence. The triple Qs, if we go to the triple Qs, it's really the same story as the SPY. In a degree, the SPY, the triple Qs, the Russell, the Dow, if one of them starts to roll over majorly, they'll all roll with each other. Not as much percentage-wise, but they will all still roll over. So the same thing, still the same thing with the triple Qs. Got divergence going sideways. I think we roll over. And the triple Qs as well, at least to this first major support. We'll say 330. IWM, Russell 2000. This is one thing that I seen that really called this rollover. We didn't have any divergence per se because it just went up, price went up. That's what you want to see. But what did happen was it was right around this trend line, the top of the trend that I could even find for our current parabolic move up. Okay? And we came up, we tested it. We Looks like we made love to it for a little bit. We gapped above it and we closed the day right on it. And then when we opened the day all the way above it, with everybody thinking that we were just going to pop above it, and it failed. Came down, back test, failed again, and here we are on our way down. Down 0.27 after hours. Oh, again, and back to that gold. I wanted to point out the top of this a couple days ago. I think it was yesterday. Gold is sideways, momentum going down. I still validate this green line as a top of the trend. I haven't validated whether it's a wedge or just a channel down. This red line right here, if it fails this and goes below it, will be the confirmation of it being a channel and it's going down further. This is the middle trend, and this is the bottom of the wedge. So you can either follow this one down or we can wedge up. And that would be a bullish wedge and we can pop out. But the way the dollar's looking, gold shouldn't do that. Silver is really a different story from everything that I see. We short squeezed up, gapped down, recovered, gapped up, we filled the gap, and now we're just still continuing this downtrend. If silver is going to break out of this wedge, I would like to see at least a back test or an attempt to back test, because I don't think silver is going to do the opposite of gold. That makes sense to everybody. Okay, Bitcoin. Here we go. Bitcoin looked like it kind of hit a wall at some point today. And it has not a negative divergence, because it wasn't. Was it a divergent high? Yeah. Divergent high. Just all the more reason to come down to either test this trend or at least the 100 moving average at 44.68. Okay, this is the nice little trend that we have. Bow, bow, bow. You could start drawing, trend lines really all day, and that's more or less what I feel like Bitcoin is. It's more speculative than it is anything else. So the more speculative you see, the more people you get in here drawing lines, they're going to buy it up to that line or sell it to that line. Okay? Same thing with Dogecoin or all the 10 other ones that they are. Until one is a confirmed, not necessarily fiat currency, but one that your government will accept for payments and debts and things like that, one will outperform the others at that time. Until then, all of them will go up forever, as long as people like Elon Musk and Kanye West want to say they will. Okay? Anyways, that is enough about that. We'll switch over to the bonds. The bonds was a little bit of a different story. The bonds going down and the market going down really confirms the dollar breakout. In my opinion, the dollar goes up, bonds are supposed to go up with it, but when that fails, the system within inside is failing. I had that explained to me one day, and this is just a minor little blip, but if the bonds fail and the market fails, that's what I was told to run for cover. So I just take that as you will. But we have today this uptrend. We could start to move this down here. It didn't fail it, but a little bit. Coming into back test. Just riding the 50. We could gap above tomorrow. The sentiment after hours says otherwise. Momentum's up. It was just a down day. Lots of volume, if I can point out that, which gives the more reason. I just say that buy volume. Pop it back up tomorrow. Ride the trend the way it should be going. Switch to the yields. The yields did the same thing. They broke out of their nice little trend. But just by a tad. Just by a tad. A little bit of momentum. Guess technically as of right now it'll be a divergent high. It could burn through. It's only a little bit. Can't foresee in the future. If I had a crystal ball, it wouldn't work. Okay? And we got the dollar. The dollar on the big news is really nothing. It's the same thing as yesterday. But that just really confirms our rollover in the market. If the dollar is going to continue up, whether it's a grind up or a fast move, it's eventually have to take effect into the market. Again, I think major levels affect these, but if it grinds here long enough and then shoots up farther, that's going to send the sentiment of the market down because people see that it is moving in one direction or the other. And it is actually affecting what it's doing, okay? So watch the move from here, either down to 90 or back up to the trend, which is almost 91 at this point. By the time it gets there, 90. That'll be your telltale. Yeah, tail. Y'all got. You get what I'm saying, okay? This is the VIX. Told you I've been keeping the eye on it. The last 2 days, it has spiked up. It spiked up yesterday, and it spiked up yet again today. Got again smashed down into the end of the day, but a little bit farther than yesterday, the day before. Yesterday after hours, or right before the open, it would have been a divergent low. The momentum being all the way up here, which is all the more reason for it to spike up here. If anybody would have eyeballed that before it happened, you could have seen the market rolling over before it happened. But here we are, still riding the 100 down. This is just an hourly. But one thing I do want to point out is if you zoom out and all of these spikes, the 200, it gets tagged, but even on these real big drawdowns, it's moving downward. This one hasn't really started to move down yet. So I just want to put an eye on that. The 50 is just now starting to look like it's curling over, but it's staying in the same place. The 50 doesn't curl over soon if we don't drop down further on the VIX. I expect the VIX to go back up and the market continue to go down. So I want to keep your eye on that one. The same thing. The UVXY it actually got down to 990 after hours, and it's all the way up to 1001. Okay. Momentum still going up. That would have been not a divergent low, but a good price to pick it up with it. Momentum moving to the upside on the hourly. These are curling over, which is why you see that. But this is also, the gray line is a trend. It's hard to trend line the UVX because it's a dwindling ETF. It dwindles down to zero eventually. But we've had reactions, and here we are just grinding on it, building momentum, and all we have was left it and came back and tagged it with more momentum. So I just want to put that in there to your rollover sentiment. If we can switch over to some indicators, put to call ratio. I think we are the exact same thing as yesterday. We opened, gapped up by $10. Okay, that instantly switched your people from up here yesterday when they thought it was going to roll over to putting calls in all day. You started getting putting in more puts as the levels were getting denied and dropping and denied and dropping. And again, here we are ending the day, making it look like more puts are being put in. So, that is actually the opposite of the rollover sentiment that I believe the put to call ratio is in reverse of gives off. But we will see. Time will tell. What was it, 420 or 39.20? That what the important level was, and we're at 16, so we could go up tomorrow. But I think we're going to roll over. If we look at oil is a leading indicator in an economy. And oil versus another thing. I'll have to look that one up for you guys. I remember I seen it. It was awesome. And then I forgot it. But after 6 or 7, 8, 9, 10 days, or however many days a row in oil we are finally starting to have a rollover. I can't remember if I looked at this yesterday, but just on a 4-hour, not even that short of a time period, we caught our high. We fell down a little bit, and then we came up and we retested that high at a divergent high, and we got denied. Well, we came back up. We tried to retest our old high, and seeing the momentum still going down, we got denied again. Okay, I think oil is going to head down. If we look at the financials real quick, the financials, I can pick just about any one of these, and they are all diverging. Technology, still going up, momentum headed down. Energy, headed up, momentum headed down. Communication services, headed up, momentum sideways. Financials is actually one that is not. I would not believe it. That's another story. Financials and consumer staples. Okay, sectors rotate, so maybe financials, commuter sectors, commuter staples. Consumer discretionary is just now starting to put in a divergent high. What's financials? Consumer staples. Healthcare is not. Consumer staples, healthcare. Look, industrials. Momentum down, sideways on price. Real estate is not. So those three. And materials, which is, technically a divergence from here, but it hasn't got to its high to confirm the divergent high. Okay, long story short, I just wanted to point out that this is look at this. This is just a quick, the only other graph I can find on silver. This is a monthly chart. That's bullish wedge, that breakout. Was that a short squeeze, or is that a confirmed breakout? Okay, this goes back to my other silver chart. There's really not enough data here to tell, but I want to see a back test of the silver. But a conclusion of the overall market, I believe we are headed sideways to down tomorrow. Buckle up, watch your VIX. Your dollar is just going to continue to rise, so eyeball your key support levels. Bring it up one more time. This is your hourly chart. Eyeball your key support. Make sure you know what you're doing. Full disclosure, I am not a financial advisor. You guys go out there and good luck. Have a good night and let me know.